Hello, everyone. I'm Michael, and I'm a bag holder. Yeah, just kidding, but seriously, okay? Um, so th- this year, um, I've you know I've gotten past that first step of increasing my savings and moved onward to trying to use my money to make more money. And one of the things I've gotten into is stock trading. And nowadays, stock trading is very, very accessible to everyone, okay? Because we have platforms like Robinhood and Webull. So this makes stock trading very accessible to everyone like you or me who's just trying to get into the trading game. All right. But as you know, it's a lot of speculation and the markets are extremely volatile. So, I'm just, warning everyone, whether you're new to it, moderate experience, or even the most seasoned traders, you guys know where I'm coming from. It's not easy. It's not simple. It's not predictable. There's a lot of money to make, but there's a lot of money to lose. Okay? That's the best way I could put it. And people who trade stocks often, you can relate. Comment below if you disagree, or comment below with your gains, your biggest gains, your biggest losses. Let's share them with each other, so the next person who comes along could see that, hey, you can make money just as well as you can lose money. So because there's people I've seen day trading or just regular trading who've made thousands of dollars during the last market dip up to the last market high. Okay. And around the time when it was the first market dip, I'll admit to you guys, I was one of those people that thought, hey, it's gonna drop even lower. Okay. So that was exactly the time that I got into the market. And ironically, a lot of us got into the market. That could explain, and the accessibility also changed. So that could explain, why stocks were spiking 500% here, 500% there. Bankrupt companies were getting pumped up, because a lot of newbies and stuff like me were just getting in there and kind of like following the leader. Okay. So again, stocks are just that simple. Stocks are speculation. Stocks are what you and I believe it's worth. So when you have a whole bunch of people getting into a stock, hiking up the price, other people see it and then they follow behind. Okay. So I mentioned earlier, I'm a bag holder. Okay. Bag holder simply after that chain reaction of people hiking up the price, people following behind, hiking it up even more, and it gets all the way up to a certain point, then boom, everyone starts selling off. So now, unfortunately, if you're one of the ones who are left holding the bag in a sense, as the price is just plummeting back to its norm, and then you bought at a higher level, you're stuck with the value of the stock being worth half or less than what you bought it for. And bag holding is you stuck with that stock because you remember, and very important, we'll talk more about this later, you don't lose anything until you realize your loss, right? So realizing your loss is just plain and simple selling it for that lower point that it's plummeted to, even though you've bought it at a higher point. So now because you've realized your loss, you've permanently lost that difference, okay? Earlier on, I would just want to just get out of there because I was impatient. I can't wait. And, I'm impatient, or I'm, unhappy that I'm sold down, and I just want to jump back into another stock. Just want to jump back into the market and see if I could get lucky and make my money back. But come to realize that's actually the worst thing you can do. Okay? I'm glad I'm a bag holder. Okay? And especially, yes, now. And I wish I would have been a bag holder then, because in all actuality, some of the stocks I've jumped out of because they plummeted have been the same ones who correct themselves and go back to the level I bought it from, or sometimes even higher. So meanwhile, I'm panicking, with weak hands. Weak hands just mean you're impatient. You can't hold it any longer. You can't stomach the fact you're down and you want to quickly jump into something else. So, I panicked, had weak hands, let it go, trying to find other opportunities. And come to find out, just a couple days down the road, I checked back on the stock and it's corrected itself back to the level I bought it at, and sometimes even higher. And then the new stock I've dove into has plummeted even worse. So it's like now I've taken a loss initially, and then I quickly jumped out of that loss thinking I was going to make an opportunity to make money elsewhere, and then that has also dropped. So I've taken 2 losses, okay? So again, this is confessions of a bag holder. I would gladly remain a bag holder because that is the better of the 2 options. Versus taking a double loss, you're better off waiting, being patient, and hoping your stock goes back to that level you bought it at, or increases even more. Okay? Because you don't want to realize those losses, because they're not losses until they're realized, and you still have time, and it's still very feasible that a stock could reach all-time highs. So that's also where it's very important. You have to do your research about these stocks, know exactly what you're investing in, making sure it's a good company that has a good product, good financials. You really, really want to know what you're investing in. PE ratios, all this intel about the stock, because then you won't be as distraught if your stock takes a tumble, because you'll be very confident that what you're investing in is a good stock, it's good for the future, and it's a good company that's going to come out with a good product that's going to make you money. Okay, so you'll feel a little bit more at ease knowing that, hey, it went down a little bit, but that's just these shorters. That's just people trying to be opportunistic, trying to make a quick dime. That's kind of dragging it down. but maybe at the next earnings report, or maybe when they finally put that product on the market, or maybe when the market becomes a little bit more stable, this stock will perform like it's supposed to perform. So that puts your mind at ease a lot when you know what you're investing in and that you have a good product. Okay guys, so again, the worst thing you want to do is just realize a huge loss and then try to rush into something that rush with the money you've lost into something that's and that gives you another loss. That's double loss, and then before you know it, you're just blowing all your money. You're just giving your money away. So, and actually, the best thing you want to do, like I said, hold the bag, hold strong. You want to have diamond hands, okay? You want to have diamond hands. You want to hold strong. You could look at it every day, but it's gonna just drive you crazy, and that's gonna make you act impulsive. So look at it, but don't study it or make it your religion, that stock or that loss. Just check in, because sometimes you might have to wait a year. Sometimes you might have to wait 5 years, 10 years, who knows, but the trick is you gotta wait, okay? And what you should do, actually, while you're holding these bags, holding these losses, while you're confident in these companies are the good companies because you've done your research into the financials, what you should do, you should work hard. That way you can contribute a little bit more money. You don't want to tie up all your money into the market, and you don't want to tie up money you need right now, because that stuff happens. Your stocks lose value, and if you're pressed for the money, then you're pressed to lose. That's also very important too. So what you should do is try to make your normal gigs, normal work, put a little extra work in. That way you have more money to put in, okay? Then you don't have to touch that group of stocks that's down, and you could buy something else, okay? You could buy, you have money to buy something else, or even better, if you know it's a good company, you have money to average down. So if that stock's cut in half at a discount, you think of it as a discount. Now it's a discount because it's a good company and it's down now. Think of it like this: it's at a discount. Okay, it's going back up. You've looked at it. It's a great product. It's going to be revolutionary. So buy more. So that's called averaging down, right? So you average down. So that way you're going to make your money back, and then you're going to make more money on those stocks you bought at a discount. So that's essential right there, guys. And again, don't tie up money you need right away. And because that forces you to act impulsive. If it's money you need for your rent or money you need for your wedding, you're gonna just settle with, who cares? Who gives a crap? I lost $2,000, but I'll take that because I need it. Or don't be, so quick or so impatient. Life's about patience. So if you're so quick or so impatient that you think oh, hey, let me go somewhere else, then you'll be, sometimes it works out. Sometimes you made the right decision getting out of that bag and going somewhere else. But you want to be very careful when you're doing that, especially when you're dealing with big unrealized losses, because sometimes that's not the right decision. Sometimes it works out, sometimes it doesn't. So just a few tips that I had to learn myself the hard way as a beginner trader, and just a few tips for some of my other beginner traders that want to get into the market out there. And hey, it's even for you guys too, my guys who are experienced traders. I see it all the time. I see you guys talk about it and confess that you couldn't hold it any longer, you know, but just here to tell you, just keep holding, average down, put more money in, buy elsewhere, or, you know, again, average down and keep holding. You know, you want to try your best not to realize these losses, especially these big losses, because a couple days down the road, or a year down the road, 5 years down the road, that same stock that you believe in could start turning a profit, okay? Now, for my beginner traders, I want to give you guys an opportunity to get into stock trading, to just even see what it looks like, you know, just to see what it looks like, okay? And just I'm gonna leave some links below in the description for some opportunities for some free stocks. We got Robinhood. Robinhood gives you 1 free stock just for signing up. You don't have to deposit anything, just need you to sign up. But they give you 1 free stock. The value is not as good as Weeble's 2 free stocks, because Weeble has 2 free stocks and they're valued $12 to $1,400 minimum, but you do have to deposit your first $100. Again, keep in mind, you don't actually have to trade with that $100. You just have to deposit it to trigger this free stocks, and then you could withdraw that out after that, okay? So again, guys, just keep holding. And again, I'm Michael, and I'm a bag holder. Peace.